Alright, thank you guys so much for tuning into today's live stream. Today is February 20th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So for today, we have unemployment claims, and that happened at 8:30 Eastern Time. And we have President Donald Trump speaking here at 7:20 p.m. Eastern Time. So there's volatility, but it got injected about around 8:30 a.m. and that has already happened. But yeah, coming into today, I don't necessarily have a bias, right? And I have two reasons for that. For two reasons why I don't have a daily bias coming into today. Well, the first reason is that the weekly candle here, the previous weekly candle here, we have already completed the previous weekly candle's objective, right? So last week we had created this bullish up close candle, which suggested to me that we're most likely going to take out this weekly high. So my weekly objective was for us to take out the weekly high, and once we complete that objective here on the weekly time frame, I no longer have a bias. So I can't use the weekly time frame to provide me a higher time frame bias. And same thing here on this daily candle. So the previous daily candle, with the way that we closed, it's rather indecisive. There's not much displacement here on the 4-hour time frames as well. That really suggests one direction, right? It's, if I were to pull this to the side, it kind of looks like a barcode. It's just up, down, or down, up, down, up, down, up, down. It's a very back and forth choppy price action, and that's kind of shown here on the daily time frame as well. So these two daily candles here on Wednesday and Thursday, it's been pretty indecisive, right? Like here, this is Tuesday's candle, and Tuesday's candle here, I can anticipate it's that this daily high here on Tuesday would be the objective. But with the way that we close here on Wednesday and Thursday, or I'm sorry, Wednesday, and this is Monday's price action. So this is Wednesday, this is Tuesday. Monday's price action was pretty, the way that we closed here on Monday was pretty easy. But yeah, the way that we close here on Tuesday and Wednesday, pretty indecisive candles. So I can't really come up with a clear objective or a bias here, at least on the daily time frame. So instead of using the daily time frame for a higher time frame objective, I would actually like to use the intraday candles or the intraday time frames, such as the 4-hour time frame, the 6-hour time frame, the 8-hour time frame, or the 10-hour time frame. So this is how we look. This is what we look like here. The 4-hour candle, if it would load. So the 4-hour candle here and the 8-hour candle here, depending on how those two candles close here coming into this morning, that's how I'm going to get my intraday bias, right? And they close in about 23 minutes or so. So once we close it, like I said, on those two time frames, the 4-hour and the 8-hour, I am provided with an objective, right? Because every single candle has an objective. So we looked at the daily candle and the weekly candle prior to us going on to the intraday time frames. So like I said, every single daily candle has an objective. Every single weekly candle has an objective. Power of 3 is fractal, and once you're able to view the daily candles, the weekly candles, the 4-hour candles, once you're able to view those all kind of the same way, then understanding price actions a little bit, it just becomes a little bit clearer to you, right? So yeah, like I said, coming into this morning, I would actually wait until we close here on the 4 hour time frame and the 8 hour time frame to provide me with a morning objective. But yeah, as of right now, I don't really have a bias. It's been rather, very, very back and forth. No need for me to really force anything here, but yeah, very, very interesting. And if we were to compare the highs here with ES, so ES, we have taken out this swing high, right? So notice how there's some sort of SMT here. So there's actually SMT here between NQ and ES at these highs, and we don't have SMT there, but we have SMT. Yeah, so we have a lot. We just have a lot of SMT coming into this week. To be honest, there's SMT here. There's SMT here. Just a lot of manipulation, and like if we were to take a look here on the weekly time frame, at least apply this to the weekly time frame, you can kind of see that it looks like we're probably going to create a weekly fair value gap here, right? And if we do create this weekly fair value gap, then it becomes a question of if we are going to retrace into this fair value gap, meaning are we going to trade into this fair value gap and expand higher, or are we just going to possibly continue higher? That could be the case as well. But yeah, it depends on where we close, right? So not yesterday, but previous week's high is 22.4. So that is the high for last week, right? If we close below that green line, I would like to see us rebalance this inefficiency. So if the weekly candle were to close right now, we would have closed below this green line. So the closing price for this week's candle here is the red line, right? And notice how the red line is below the green line. That suggests to me that we're most likely going to rebalance, trade into this inefficiency to possibly continue higher. But if this red line, let's just say that if we close above the green line, then I would treat this fair value gap here on the weekly time frame as a breakaway gap, meaning I don't want to see prices trade back into it. We may do something like this and then expand higher, but I don't want to see us rebalance this inefficiency. So there's kind of two scenarios here that I'm kind of anticipating right now. But yeah, that's pretty much all I have for the weekly time frame. At least it's a little bit too early to call because we haven't closed yet, but just something that I do want to just throw out there. I mean, looking pretty bullish. Even here on the daily time frame, it's been pretty choppy, right? Like up, down, up, down, up, down, up, down, and then we've been slowly climbing back up. But like it's like a barcode. Very, very interesting. I mean, but yeah. Let's see here. So coming into the yearly candle, I'm pretty bullish here for the year. I do want to see us take out. So this is the previous yearly candle, right? And notice how this candle, with the way that we closed, I can anticipate for us to take out the yearly high. It's like I can assume that we're most likely going to do something like this. So we're going to create the open. We're going to trade lower into some sort of fair value gap, possibly, and then we should expand higher to take out the yearly high. That would be my, like, that's how I would want to see prices here coming into this year. But yeah, yearly high is my draw of liquidity based on how we closed here on this time frame. So as you guys can see, the way that I'm applying this power of three concept, it's very simple, and it's fractal, meaning I can apply this way of, I guess, approaching price action in I can use it in almost every single, I can use it in every single time frame. I just stay away from using it on like the day like on the 5-minute time frame and the 1-minute time frame, because there hasn't been that much time that has passed for a candle to be created on the 1-minute time frame or 5-minute time frame. But I do like using it on, like, I like applying this power of three concept to like the 15-minute time frame and above, right? And it's just that way of viewing prices. It's just a way for me to kind of have a directional bias. But there's two other components to my strategy that I also implement to get an actual like trade, right? So I don't take a trade just simply because of how a candle looks. There are two other reasons, and I can go over that with you guys here on my trading journal. So to take a look at a trade, let's just take a look at a random one here. Let's go this one. Here, let's go with this one. All right, so coming into this trade, it looks like there's a lot of stuff going on here, but I'll break it down very, very simple. So let's take a look at how we close here on the 4-hour candle and the 10-hour candle. This 10-hour candle to me, very bullish. Or not, sorry, it's very bearish. The way that we closed, I can anticipate for prices to take out the 10-hour low. Same thing here with the 4-hour time frame. This 4-hour candle also suggesting lower prices, right? Very bearish. And one thing I do want to point out is that this 4-hour low here is actually the same low as the 10-hour low. And this means that we should complete the 10-hour objective within the next 4 hours. This concept is called scope. Scope allows you to understand when prices should complete a specific objective and when it should not. So coming into this trade, my higher time frame order flow or bias here would be lower prices, right? I want to see prices continue lower here on the macro time frame or on the macro sense for lower prices, right? So for me to align myself with this specific order flow, I would want to see lower prices here on the lower time frames relative to the 4-hour. And so going from the 4-hour / 10-hour time frame, I would go on to the 1-hour time frame. And then I know, hey, this hourly candle here, if you guys can see, this hourly candle, it's a bearish candle, right? The way that we created this candle, I can anticipate for prices to take out the this 1-hour candle's low. So now that the hourly candle is suggesting lower prices, which means it's in alignment with the 4-hour time frame and the 10-hour time frame. So that's two components met in my strategy, right? I have a model how am I going to align myself with this trade? And I have a higher time frame objective. What is the macro? What is the higher time frame vision? Right? So now I'm going to zoom in just a little bit more. I'm going to go onto the 15-minute time frame, just see where we're at, right? So hourly model, I go onto the 15-minute time frame, and I notice, hey, the hourly model here, this hourly candle, its low is the same low as the 30-minute low and the 15-minute low. So now I'm anticipating, okay, so because the 15-minute low is the same low as the hourly low, I can actually anticipate for prices to take out the 15, or for us to take out the hourly low within the next 15 minutes. So here I'm thinking to myself, okay, so I have the 10-hour time frame and the 4-hour time frame as my higher time frame objective, and my higher time frame order flow is lower prices. I have a 15-minute model that I used to scope into a 1-hour model. So now going from the 15-minute model, I'm going onto the lower time frames, such as the 1 minute, the 2 minute, the 3, the 4, or the 5, right? So my entry here is actually on the 3-minute time frame. And I notice here, this 3-minute fair value gap, this fair value gap here should be rebalanced. Or not rebalanced, but should be respected, right? I want to see us trade up into this fair value gap, respect this fair value gap, and then continue lower. And one thing I do want to mention here too is notice how we create this 15-minute fair value gap. The way that we created this fair value gap, I can anticipate for us to treat this 15-minute fair value gap as a breakaway gap, meaning I don't want to see prices take out this 15-minute candle's high, but I want to see us take out this candle's low first and then possibly rebalancing the inefficiency. But like I said, breakaway gap, its key concept is in its name, breakaway. I don't want to see this gap get rebalanced, so it should be broken away from, right? So like I said, 3-minute fair value gap as my entry pattern. So for me to actually enter this trade here, once prices opens up here at 2, we leave the hourly low still intact. We kind of consolidate for a little bit, but once we trade up into this 3-minute fair value gap, I take my entry. I have my stop loss right at the breakaway gap, because like I said, a characteristic of a breakaway gap is that prices shouldn't trade back into it. So if I use that in confluence with my stop loss, and like it makes sense for my stop loss to be here, right? And what am I targeting? I'm targeting the hourly low / 15-minute low, which is my model's objective, right? But after we take out the 15-minute model, after we take out the 15-minute objective, which is my model, we should see prices expand lower towards the 4-hour time frames, the 4-hour candle's low, right? And what did I say about the 4-hour candle? It's a bearish candle, meaning I can anticipate for prices to take out its low. So I still want to see continuation of lower prices here. And this model is called a expansion model, right? We should expand towards the 4-hour low after completing the 15-minute objective, which is the 15-minute objective is the 15-minute low. And yeah, it's very, very simple trade. Very, very easy trade. So it is 8:50. So all of those things that I just went over with you guys, right? A higher time frame objective, a model, and a entry pattern. All of those components are what makes up my strategy. But there are going to be times where like the market looks like very, very back and forth, right? It's just super like not favorable. And so my model might not present itself, right? My strategy might not be there. So if that's the case, I just have to sit on my hands and not force anything. But yeah, going back to the charts here, I actually noticed we have taken out previous day low. So now I'm thinking to myself, like, okay, after we complete the after we take out the previous day low, how low can we continue? We could actually expand lower to target Tuesday's low of day, which I'm going to highlight here as so 218 low. So there's actually an SMT divergence here right now with NQ and ES. So ES has taken out NQ has taken out previous day low and now Tuesday's low of day, whereas ES has failed to take out its respective low, right? So there's SMT right now. Here I would be a little bit wary for some sort of like manipulation. Like, is this manipulation right now? So for me, I'm actually not gonna force anything here. I'm just gonna wait until the 4-hour candle closes, the 8-hour candle closes, to really elect a bias. But but yeah, there's, like I said, there's SMT right now. Don't want to force anything. I want to see everything that I went over here with you guys here on the trade recap, right? I want to see that here for today. So I can kind of see that we're expanding lower here. We actually might end up taking out, which we just did actually. We just took out February 14th low of day, and where ES has failed to take it out, or we've yet to take out Tuesday's low of day. So there's SMT right now. Like I said, there's a higher time frame objective, which is the 4-hour low, the 8-hour low, but we don't have exactly a model, right? If we go into the 15-minute time frame, I can see that the 15-minute low is the same low as the 4-hour low. So this isn't exactly a model. The 15-minute time frame would actually still be considered the higher time frame because the 15-minute low is the same low as the 4-hour low. We're not necessarily, are we retracing back into discount here by any chance? Okay, so we actually, okay, so this is something that I want to see here. So there is a dealing range, right, between this 4-hour swing low and this 4-hour swing high. And with the way that we created this dealing range, and with the way that we're kind of closing here on this 4-hour candle / 8-hour candle, it's suggesting to me bull or bearish price action, right? And if we're bearish here, how low can we go is the question. Well, we can actually see a rebalance or a retrace back inside the discount of this dealing range. The discount is denoted by this green line here, or the green box here. So this green box is prices, is the discount, right? So this actually could be my higher time frame objective, which is for us to retrace back into discount. So that would be a higher time frame objective. My model here could actually be on the 4-hour time frame, and like I said, going back to the 15-minute time frame, I can see that the 15-minute time frames, the 15-minute low is the same low as a 4-hour low and the 8-hour low. Meaning we should complete the 4-hour objective within the next 15 minutes here. So I have a higher time frame objective, I have a model, which is the 15-minute time frame. So now all I need is a entry pattern, right? And depending on how we close here on this 5-minute candle, I would like to see lower prices, but let's just wait here for a little bit. So if we still haven't retraced back into the discount of this 4-hour dealing range, then I'll actually consider taking this trade. But if we do, which we just did, I'm not going to force anything anymore, right? So we have already retraced back inside this 4-hour dealing range's discount level. So now, instead of using this 4-hour dealing range, we could actually draw it a little bit lower and use a daily dealing range. So let's see what happens here. So I want to see ES actually follow suit and take out the Tuesday's low of day as well. And let me actually draw up the discount level for ES. So here's that dealing range for ES. So let's see, we have about a minute left. So I have a higher time frame objective, but I don't necessarily have a model to align myself with the 4-hour and the 8-hour candles objective, right? Both of those time frames, like I said, would provide me with a higher time frame objective. I just don't have a model. And let's see. So we did begin to sell off, and I'm kind of curious to see why we're selling off right now. So let's see how much points we have moved. We've moved about 220 points. We're relatively pretty decent size here, actually. Here, Delta Airlines. I actually wanted to see Delta Airlines, like, I guess, continue lower because of the news that was released about Delta Airlines, but I mean, it's only moved about what, 66 to 63, about almost like $3 a share. NUE, this is a steel company, right? A United States steel company. And I actually want to see this company rise in price because tariffs are about to be implemented here on China, and I'm not completely too sure about other countries, but because there's been tariffs that Donald Trump is implementing on steel coming from other countries, this actually could lead to a surge in prices or surge in demand for the companies in the United States, which could correlate to higher stock price, right? So we'll see. I think I think the news about him releasing the tariffs actually happened here on January 28th, and we've seen a steady, a steady rise, about $21, $20 to $1 here in the Nuker. I think it's called Nuker. Not entirely too sure. Yeah, Nuker. Here and Q. So we actually just had a immediate weekly rebalanced, and like I said, my intraday, my morning objective was for us to take out the 4-hour and the 8-hour low, right? So here, going back, like I said, with the way that we close here on the 4-hour time frame and the 8-hour time frame, I could anticipate for us to take out the 4-hour low and the 8-hour low, right? just based off of how we closed here on those two specific candles, it's pretty bearish. Like, I can anticipate the low to be taken, but after we take out the low, I can no longer use the 4-hour candle and the 8-hour candle as my as a higher time frame objective, right? So now the next intraday candle that's going to close is the 6-hour candle. And this 6-hour candle here is going to close in about 2 hours or so. So we still have a lot of time left. But yeah, I can't use the 4-hour time frame and I can't use the 8-hour time frame anymore for a higher time frame objective. I would have to wait until the 6-hour candle close, because once a candle closes, there's a new objective in mind, right? There's a new reason for why prices should continue in a certain, I guess, way. So immediate weekly rebalance. Not entirely too sure what prices wants to do now, but I do want to go over here and look over the pros and cons here with you guys. So coming into this week, I should continue to take consistent trades, right? In every single trade that I take, I should be able to identify what my higher time frame objective is. How am I going to align myself with the higher time frame, which is my model and my entry pattern. So those three components should always be present whenever I'm taking a trade. I should be able to identify those things, right? If someone were to come up to me and ask me, hey, why did you take this specific trade here? I should be able to explain to them, hey, this is my higher time frame objective. This is how or where I want to see prices continue in a macro sense. My model, how am I going to align myself with the higher time frame order flow, is based off of this specific time frame, and my entry pattern is this fair value gap right here, right? I should be able to answer those questions. I should be able to tell a story with the trade that I take. Consistent models, right? Second, being able to execute. There are going to be times where, you know, my trade strategy is there, everything's met. I have my higher time frame objective, I have a model, and I have an entry pattern. All I have to do in that situation is press the button, right? I shouldn't care about whether or not the outcome is going to be a losing outcome or a winning outcome. That shouldn't concern me because that's not in my control. What is in my control, however, is how I actually execute. And from last week, there was a quote, and I thought it's a really good quote, and it's, if you know how to make $10, if you know how to make $10, right, you shouldn't be afraid to risk it to make 20. And as a trader, I can really relate with this, and it's just, you know, there's opportunity cost for everything, right? And it's whether or not you're willing to risk a certain thing to possibly get another thing, right? Third, being patient. Like coming into this morning, like I said with you guys, didn't necessarily have a model. I had a higher time frame objective, but I didn't have a reason for me to actually align myself with that time, that order flow, right? That's completely fine. That's me practicing patience, right, and discipline. And yeah, what are some things that I can continue to work on? Being constantly aware of my thoughts and my actions, and this goes way past trading now. This is like a lifestyle type of thing. If your thoughts and your actions are in alignment with your goals and values, anything is possible. It's like viewing your life in terms of lower time frame and higher time frame, right? So my model is to get the lower time frames, or is to have a lower time frame model to align myself with the higher time frame, right? If I can apply that concept to like life, then it just becomes efficient. Like everything just becomes efficient. It's like gears. Like how I see my model is this right here, right? Everything has to be working for the entire whole to be working, right? Every part should be doing their thing, should be doing their job for the entire whole to be working. If one of these gears isn't working, then this one isn't going to be working. And if this one isn't working, this one isn't working. It's a whole system. And that's kind of how you should approach like life, right? If your current self, if you're currently not doing the things that your quote unquote future self should be doing, then there's no alignment. It's not efficient. Nothing could be accomplished, right? And second thing here, what can I continue to work on? Being able to express my ideas confidently and effectively. Everything that I want to accomplish in life requires me to be able to communicate in a way where it's very efficient, it's effective. It should be confident too, right? And I believe your trading personality, how you are as a trader, affects who you are, or should translate into who you are in real life. And that goes vice versa. Who you are as a person is who you are as a trader. So some of the improvements here for this week: continue to take consistent trades, right? Like I said, every single trade that I take, I should be able to identify higher time frame objective, a model, and a entry pattern. If one of those components aren't present, I don't have to force anything. I just have to sit on my hands like I'm doing right now, or not physically, but metaphorically, and just be patient. There's no reason for you to force anything to happen if it's not present. Second, like I said, there's a quote that I heard last week: if you know how to make $10, don't be afraid to risk it to make 20. Third, watching for SMT. Like I said, SMT is a price action indicator that indicates where manipulation has occurred, where it could have happened on between ES and NQ or whatever. It just shows you when the algorithm or whatever moves the market has intervened, and you don't want to be a part of manipulation. And that basically sums it up for my for the pros and cons section of the live stream. Let's see, it's been 40 minutes. There's not really much here. There's not much I want to go over here with you guys anymore. I mean, we just had the weekly immediate rebalanced. We have already completed the 4-hour/8-hour objective. I explained to you guys why I didn't take a part of the trade. I think that's going to wrap it up for today's live stream. Thank you guys so much for tuning in, and until next time, be safe.